Welcome back to another episode of Getting Personal. I'm here today with John, the CEO of Bank Social. It's great to have you, John. How are you doing today?
Doing fantastic. Great to be here. Thanks so much. We finally got to do this.
Absolutely. I've been looking forward to this. I really have.
Same here. I'm glad we
How
got to get it done.
before we get into your personal story and obviously Bank Social, I'd love to get your pulse on the ecosystem right now, whether that be, Hedera,
It's on fire.
Beyond.
It's
Yeah.
on fire. I mean, well, let's talk outside of the realm of price appreciation, because that's always something that brings excitement with it. In general, though, with what and we don't know anything that's not public information already. With what we know about what Hedera has been able to accomplish just in these last, I would call it 6 to 8 months, and really these things have probably been being worked on for the last year and a half. Certainly, though, the announcements that are coming out, we couldn't be more bullish on the opportunity that exists within the Hedera ecosystem. And then just knowing what we're building and what we're putting into the credit union ecosystem, not just in the US but worldwide, and it all being built on Hedera, we couldn't be more excited about the opportunity as well. So generally, I think the outlook is beyond positive. I think it's in terms that we would use in the space, bullish, extremely bullish. We're extremely bullish at this point. We have landed in the right spot, certainly. We kind of were hovering for a while, and we saw Hedera as the place to be, and it certainly has been the right choice. That's for sure.
Nice. I want to ask you more about that move to Hedera in a bit, but for those hearing about Bank Social for the first time, give them an overview. What is it you guys are building at Bank Social?
Yeah, so we're building the first open banking platform that's powered by Web3 technologies, building it for credit unions specifically, because we believe that credit unions, not that banks and community banks, we've seen some community banks use this. We believe that the credit union ethos and the DeFi ethos align identically. We actually, about a year and a half ago, I think I coined the term, and maybe I didn't coin the term, but I certainly am the only person I've heard use it, analog DeFi. We call credit unions analog DeFi because the way they work is the members, there are no shareholders. The members are the shareholders, right? It's the members' money. The members get the benefits in the form of lower rates. When you go in and get a loan, it's typically, if you go get a car loan, it's typically a credit union loan, because those are the best loans. Those are the lowest cost loans. And that turns out to be because of the way they're structured. They're very much structured. So we've written a few white papers. We've got a number of people in the credit union space, including our own Becky Reed, who's our chief operations officer, former longtime CEO of credit unions, several credit unions. But we've got a bunch of other C-level executives that are a combination of advisors and that are helping us with our block advocates, 5013C3. We've released Becky's book. So if you want to understand what we're building from a high level and very succinctly, go read Becky Reed's book, Credit Unions and DeFi. It's a financial renaissance. It exactly explains it's a very short read. It's about an hour long, 10,000 words. It gets the point across, though, exactly. And so inside of that, we've come up with approaches that are novel, like the BSL DAO. So the token, our Bank Social token, is a major component of this ecosystem that we're building. And the Bank Social token right now fuels business lending in the form of a decentralized DAO-based mechanism that allows DAO participants, token holders, to participate in this future of what we have envisioned and what we've implemented. And, it's quite exciting to see. Like, there was an article I posted the other day about how Wyoming has taken a lead in the whole DAO. So we registered about a year and a half ago in Wyoming as a DAO to have this legal structure, this incorporation structure. There's a bunch of reasons why you would do that. Mostly, it gives the legitimacy and the protections to the entire infrastructure. So what we've done in building this revolution of Web3 and incorporating it into credit unions is really starting to gain traction. We were just in We were just in DC last week and meeting. It's called GAC. It's the Government Affairs Council. It's the largest credit union event in the United States. I think total of like 20,000 people, but 10,000 registered people at the event. Just massive. It takes over, pretty much a third of DC. And we had a digital assets roundtable with the regulator, the head of the NCUA, and couldn't be more excited about the understanding from the credit union space, because again, they build for the people. Their whole ethos and their whole model is enablement of the member, the people, which again aligns exactly with the ethos of DeFi, the ethos of the DAO, the ethos of everything we're doing together, right? Community. We believe that. So I haven't talked a lot about it in the last year, but I used to talk a lot about it. The socialization of capitalism, right? So socializing capitalism. Capitalism is a great model. We think it's one of the greatest models ever invented. And these new technologies, if we look at, there's a book called Read, Write, Own. It talks about the migration from the early days of the internet, the democratized open internet. But it was really infant, and it was read, and then it moved to kind of this more centralized control, big tech model. But it enabled write, right? So you can read, and then you could also write. And now the third wave of the internet aims to re-democratize and to provide that ownership capability in the form of these cryptographic, decentralized, distributed, open ledgers. And so we believe that this very closely aligns with the credit union space. Credit unions believe that these technologies. The other good thing is we say, like, when you look at third world countries or developing countries. Africa is a really good example of this. South America is a really good example of this. You tend to have, they're way behind in the evolution of technology. And so you tend to have this ability to not have to, telephones are kind of the best example of it. In America, we went from, phones, voice over IP, and then we went to the mobile networks, and we had 5, 6, 7 iterations of mobile networks, and you're getting a new phone every 2 years. And then we went to LTE and 5G, and now we're going to 6G. They don't do that in these developing countries. And if they just go directly from like landlines to now everybody, even we're hearing that beggars in the streets have phones and they're accepting Bitcoin donations. And I mean, it's similar to credit union space in that the tech and really banking. I mean, a lot of banking is powered by COBOL. I don't even think there's a developer amongst us in our room. They could probably all code in COBOL. I think none of them would choose to build an application in COBOL. But these systems are what most banks, most credit unions, that they have access to. And I think the real silver lining here is they've got the ability to make that transition, that quantum leap forward, and not have to go through all those iterations that happened over the last 35 to 40 years. They can literally skip forward to Web3. And we see them doing that. We see them embracing that. And that's kind of what's most exciting about what we're doing.
Beautiful. That's a very empowering vision, right? For these people and these ecosystems that Web3 is going to provide this to. I'd love to ask you, go back to the point where you said, you were talking about Hedera, and you mentioned that you're bullish, but I'd love to pick your brains on, because you had the launch of the BSL token on Hedera, a couple of months ago now, quite recent.
I think 2 months, maybe month and a half. Yep, hasn't been that long at all.
How did that go, and why? Like, why Hedera? Like, why did you decide to bridge over to Hedera?
Tons of reasons. So originally, our token has a staking component to it, right? So the users of the token stake. And so when we originally launched on Ethereum, gas fees were still somewhat reasonable. We bridged to Binance because those fees were also somewhat reasonable, but still orders of magnitude, a couple orders of magnitude higher than even Polygon and Cardano and some of the other ones. When we first, so I've been following Hedera since 2016, 2017. So a friend of mine, Robert Stepanek, who's one of the earliest guys that I know of outside of myself. So I learned about Bitcoin from a developer. His name, and Kevin over here knows Ben Lake. So Ben Lake was, this is no lies here. It's all truth. And I've got the team around me to kind of corroborate my story. In 2010, in May of 2010, actually, Ben Lake left the company that Kevin and Phil behind me we were working at, and I was actually coming back in, and Ben was on his way out, and on his kind of exit day, we went to eat lunch at a Boston Market in Garland, Texas, and he told me about Bitcoin. So my friend Robert is the first person I told about it, and then of course a bunch of other friends about it. And in 20, we always would argue about what's the next thing coming. He was a big Bitcoin advocate, and I was really more about the evolution of these systems and how they were going to really start to disrupt existing technologies and create this new version of the web. And in 2016, I caught an article about Hashgraph. And really, it was when it was more hash. I had seen some stuff about Hashdag, but more about Hashgraph, and so I was really excited about it. The thing that kept us from fully moving over was, it had HTS, it had HCS. We really needed we needed programmability. We needed on-chain programmability for, things like staking and some other novel things that I can't talk about right here. And it wasn't until, kind of when we were first looking in 2021 that smart contracts were starting to come out. The concept of them was, EVM, and the whole, being able to program in Solidity was starting to be introduced on Hedera. And as soon as we found that out, we were like, okay, we really need to focus on what our bridge to, because there's the whole difference of HTS versus everything on every other chain. There is no concept of a token service on most other chains. And so when we looked at it, we said, okay, we get the benefit of a enterprise level SDK. We get the benefit of the fixed low fee in US dollars that doesn't go up and down with the cost of the price of the token, right? So you still might get surge pricing, but all of this it's predictable, and we can compute it, right? We know what the surge pricing is going to be. We can compute it. Versus on Ethereum, it's like there really is no surge pricing model. It's just like whatever it is at the time. And so we said we made the decision in kind of late 22, early 23 to start fully focusing our entire ecosystem to be moved to Hedera. And it was about in the beginning of 23 when I think at the end of 22, I met Mance and Leem. I met Mance definitely. And then at the beginning of 23, I met Lehman. And once we understood, so what was really funny is that Mance and Lehman back in 2016, 2015, started working with credit unions. They also thought that the credit union space was a place where this ethos of DeFi could really take off and grow because it had a very close alignment. And so we found that out when we were we were talking with a couple of partners, and we brought Manson into those discussions, and Lehman as well. We brought them into those discussions. We actually just live a few miles away from each other. And it turned out that all this stuff started coming out where they had been talking, and they were like, oh, I think we were at this big round table, and they were like, I think I remember you from 2015 when we were. And so, we saw the opportunity. We saw the ability of the network. We love the council. We love the community. I think it's an extremely strong community. There's so many other nuanced things within the technology itself, like token gating, right? With the token associate. We didn't want to go into a place where a lot of the failures of the legacy kind of infrastructure ideology was just being bridged into Web3. We wanted to really go to a place where there was a new opportunity in Web3. And when we show the deck, we have a deck where we show Bitcoin as phase 1, we show Ethereum as phase 2, and we say, Bitcoin was sovereignty of money, right? We proved you could get the middleman out of the way. And then you had Ethereum, which was programmability of money, but you still have in both of those, you still have the problem of governance, right? And then Hedera came out, and you solved the problem of governance for the enterprise user. Certainly as a gold, everybody's mining gold. Where do you get your gold from? Don't know, don't matter. That's kind of the Bitcoin model. Ethereum proved programmability, and then Hedera solved governance. And so, we really are, as we started to transition, we really looked at it holistically from an entire ecosystem perspective of how we could build, money transfer, immutability. So immutability of back end systems, right? So a lot of these cores and credit unions are starting to use AI. They have problems with, what happens when a bank has fraud. How do you prove who did the fraud when they did the fraud? Well, with immutability, using consensus service and some other things, we can eliminate these things from. So we've got, the regulators are starting to get interested in how these types of technologies can enhance and improve the security of the underlying network of banks and credit unions. So yeah, we see a tremendous opportunity. We've committed and gone all in. I think our wallet is, while it is a multi-chain wallet, I think we're the only multi-chain, so many chains on the wallet with one key. We do everything that we build, with the exception of, you want to buy Bitcoin, you want to buy Ethereum, everything we build is built directly on either HCS, HTS, or with a smart contract, custom smart contracts that we have. And we're looking at tons of things from lending and liquidity networks to, utilizing HCS for checkpointing core data and other real novel approaches. In the whole idea is, how do we strengthen the network so that it can become more autonomous and provide a more secure, lower cost access, that leapfrog forward from COBOL to Web3 in one environment, one platform that we call Bank Social.
Amazing. I wanna shift gears to you a little bit. Like, what I want to hear from you before, like, what led you to Bank Social? What shaped you as a person in the past to that brought you to Bank Social and to where we are today?
So I'm a software developer. I've me and my brother and I, proper grammar. My brother and I, our background is, as early as 7, 8 years old. We got very lucky. A gentleman named George McMenemy was our next door neighbor, and his sons were a very good friend of ours, Andrew. And he would, Andrew didn't like computers as much as my brother and I did. We took on to computers very early, and George convinced my parents to buy us computers very early on. And we got into, early on it was BBSs, and we kind of like the hacker. We had our own hacker names, and I won't put them out there in case they're still out there somewhere and people can tie us to bad stuff. But we built, we first started building, we would try to mess with bulletin board systems, but then we really got into kind of how we could hack AOL. So we would build some of these I guess tools to play with other people on AOL. We didn't. I don't think we did anything highly illegal. Certainly, though, it was fringe, and we learned how to program, and we learned how to take things apart, and we learned how to really start in this future of what was going to be the web economy. And fast forward, I out of college, I ended up working at a place called Speed FC, which was a white label Amazon for large corporations, so large retailers. And that's actually where the guys here next to me, Kevin was actually the guy. Kevin right here next to me, he was my boss out of college. My first boss taught me, a lot of what I know. And we built some really cool stuff, actually all open source, big proponent of open source. I actually try not to use anything but open source. And we built some great technology, went off and did some of my own stuff, started a few companies, came back to Speed when that was going through an exit that got exited. Kevin and then them came back for a third jaunt over there. Long story, but they exited to cart.com. So they wrote all the software, a lot of the software that powers the logistical backend, warehouse management backend of cart.com, even so a lot of experience with payment gateways, high uptime systems. It's quite funny, like banking systems aren't as uptime as we think. They go offline for hours at night and reconcile. It's kind of not the way that the future should be. We should have access to our money 24/7. We should be able to do what we need to do with our money in a safe, secure, compliant, and regulatable way. I think those are paramount over a lot of the things we do. Is we do work in a compliance space and we adhere to regulations um, um, as best we can. So, that's really my story. And when I came to, I started, very early in the crypto space with Bitcoin. Did pretty much everything you could do with Bitcoin. Very early in the Ethereum space, learned Solidity very early on. And as I was watching the adoption curves of these technologies, it's kind of like you got to time the market right. So I lived through the early phase of the web. I lived through the app, kind of Web 2 and the app boom of the mid 2000s when the app stores came online. And I was looking for that entry point of adoption. And it's kind of hard to, when you're too early, there's a like a graph. It's a well-known graph where you have this precipitous drop off of the early adopters and the early majority. And so it's hard to come when the early adopters are there, because there's going to be a period of time. And I think in 2019, 2018, 2019, we had the early adopters, the guys who were building that first wave of DeFi. And really what that looked like to me was the early wave of the web, right? So the from the late 80s through kind of the mid 90s, late 90s, you had all the people kind of building the first wave of experimental technologies of what was going to move forward. And then you had this die off in the late 90s and the dot-com bubble and all that. And then you had the wave of the new companies that survived through that. And so we came on in late 2020, early 2021, and I was looking for a place to get involved. I was, in a couple of, starting to play in the meme coin space and understanding really what was going on. And then we launched Bank Social as the first DAO-based business lending platform that did a loan. And we've just kept taking it from there. I met Becky as a part of, in late 2021, I was like, okay, we've got the DAO off the ground. We launched the token. We've done it in a compliant way. And now we're trying to look at how do we grow this thing, right? And so we said, well, I looked around the world and we looked everywhere. We looked, everywhere you could think of, even like tiny islands that would allow you to spin up banks for like 80 grand, right? We looked everywhere and we came back. What I was looking for more than just, hey, how do I spin up an exchange and make as much money as I can? Because we could have done that. We wanted to change the world. And so we said, how can we change the world and do it in a way that was compliant and in a place that was not only willing to do it, but that would welcome the opportunity to do it and that could benefit from the opportunity to do it. So I ended up coming back after all the research. It took about 3 months for us to do the deep dives and came back to American credit unions. And so I started the process to start a credit union in America. And I got through the first wave of application process and got that completed, got the first wave approved by the regulator. And they told me, hey, you should probably go find a credit union person. So this was in late 2021. I said, okay, let me find a credit union person. So I sent out, I think they sent me that email at 6:00 at night. And I went out that night. I didn't read it until like 11 p.m. And then I went out all night till like 3 a.m. and sent out hundreds of LinkedIn requests to CEOs, COOs, everybody up and down the spectrum in the credit union space. A few people answered me, but one person at 4 a.m., that's what time she wakes up, answered me. And we haven't stopped talking since. We literally every day, there's hours that we talk every day. I mean, some days it's probably as little as 15, 20 minutes a day. We have not stopped talking. And so I engaged with Becky on January 2nd of 2022. And over about 2 months, we kept meeting because she was in Dallas as well. Just happened that she was in Dallas. She thought I was calling her or reaching out to her because she did a lot of crypto stuff, posting on LinkedIn. But no, I didn't even know that. I just was looking for CEOs of people that might want to be involved with this. And we met a couple months. We talked. And we understood. She introduced me to the concept of the collaboration, the collaborative, things that I didn't know. I inherently felt it, that this was a place that this could be. I didn't know a quarter or 10th or a hundredth of what I know now about it. And Becky helped me understand that there was really a collaborative, people focused, member focused place, which is exactly what I think DeFi is, and I think exactly what Web3 is about ownership, security, all those things that we want, we inherently feel, but that the traditional mechanisms have kind of kept. And part of it is technology, and part of it is people holding on to control.
Mm-hmm.
But now with open source and with these distributed ledgers, we have the ability, and with the ethos of credit unions, especially the small credit unions, we really have the ability to introduce this whole new realm of people that are looking for a fair, equitable access to financial services that the credit unions have had a hard time staying in front of the technology on. And so
Mm-hmm.
that's when in kind of mid to late 2022, Becky said, let me launch y'all's self-custody exchange into my credit union. So we built that in a month or two. We built that, we launched that. And then we just kept gaining steam and gaining traction. We had some conversations with the regulators. They actually came into Becky's credit union and did a they were supposed to be there for 6 days. They did a fire drill. They were like, "What are you doing over there? You're launching you're doing stable coins, and so what are you doing?" And they came in, and within I won't fully disclose what they did, but essentially they looked at it and said, "Wow, self custody. This is a novel idea." And they looked at the risk profile, the risk model, and all the things that come with ownership of your own assets. And they said, "Wow, this we don't know if it's the future. We certainly know it's less risky than the custodial model and some of the traditional aspects of what has been presented to us." So that's kind of around the time we got introduced to. I did a cold outreach to Mance, and we then got introduced to Lehman, and it's just kept steamrolling and snowballing from there.
And here we are.
And here we are.
You mentioned exchange a couple of times. I did collect a few community questions, and there is one here from go tribal underscore h bar who says he'd love to know more about the exchange. Goes on to say proposed trading fees, percentage, Bank Social would make per trade liquidity structure. He then says getting it right could make Bank Social what Binance were aiming at.
Yeah, exactly. So one of the components of our model is launching so instead of trying to sell individuals on the idea, we are going into credit unions and partnering with them because they're noticing massive outflows of deposits into centralized exchanges, and those deposits tend to not come back, sometimes because people buy meme coins and the bottom falls out from under them so they can't come back, but most of the time it's because people are just holding those assets and those funds there. And so these exchanges are turning into non-regulated banks essentially. And I think that's where you see regulators starting to step in and trying to figure out how do they do this. But by offering a self-custody exchange to credit unions and their members, we have the ability to gain market recognition and offer a safe alternative that keeps those deposits in the credit union ecosystem, which is one of the major features of our exchange versus other exchanges. As far as fees and all those things go, they're in line with market fees and market structures. I think because we're straight to self-custody, when you look at the overall fees, I mean, if you just look at, so we've got a number of things coming. If you just look at the cost to send crypto for off ramping. So if you hold self custody and you send crypto, so $1,000, right? You send $1,000 of HBAR to a custodial exchange to off ramp it. On HBAR, it's not too bad. You lose a couple pennies, you're done. On Ethereum, on Bitcoin, it's horrid, right? Because you lose $10 to $30 on the first transaction. They sweep it out of your individual address into an omnibus account, so you lose another $10 to $30. Then you sell it into their on custodial exchange currency. You lose another $30 to $50, and then you off ramp it. So the total cost is $100, $150 by the time you get done with it. With our model, it's really just off ramp directly to your account. So it's from the fee structure, I think we're well in line, probably better than when you start to consider all these factors into it. We've also got some features that are going to be launching that are for token holders. So people who hold the bank social token, we've got some features that are about to launch that'll provide for an enhanced experience for token holders in the wallet and in the app. And then again, these features are extended to credit union members, and so they're getting access to the bank, the bank social token, the DAO, the all the HTS features that we're about to be launching, including some HTS tokens that we've got some novel approaches to doing things with. So, that question just on the surface, just saying, oh yeah, we use 1.5% or whatever the fee is or whatever, it doesn't really explain the full thing. So I hope that gives more context into the difference, the real difference that's empowering the end user at the end of the day for self-custody ownership, and then the lowest cost ability to interact with these environments and these ecosystems within the traditional finance space.
Absolutely. Exciting times, I think, for everyone.
Absolutely.
E_Mars. I don't know if this is something else, one of these features or things that you have coming. Says, curious how a DeFi debit card could change everyday transaction.
Yeah. So a DeFi debit card. We've actually got some patents on some of this stuff, so I can't talk too much about it because we're in the process of finalizing the patents. Certainly, though, if we look at just the novelty we've brought to the space so far, and our team and our ability to execute and the experience within our team, both from the traditional space and then kind of pushing other spaces we've been in forward drastically. We've got some really cool stuff that we can do with a lot of these things. Point of sale integrations. There's so much. There's so much that's in the works. But again, it's hard to drop too much alpha because we've just I know that people sometimes are like, well, you need to get out there and advertise it. It's like, yeah, but you also a lot of the times have these vaporware copycats that spin up, and they have a few $100, they hire people on Fiverr to make videos, and now you're trying to work against that. So we've been having to keep it, but yeah, certainly I don't know that I would say it's a pure DeFi credit card, debit card infrastructure. Certainly components of it, novelties around that are things that are in the works and that we're working on.
I mean, personally, as an H bar holder, I just want to be able to go to the store, right, and use my H bar to buy my loaf of bread or my beer or whatever it is.
Right. And when you look at that, there's a couple different ways to do that. So when you look at the traditional credit card rail, if you have to use the credit card rail, there's going to be a percent fee that you can't get past, the interchange fee. You're not going to be able to get past that. So how do we go even more novel? How do we get rid of the credit card fee? And those are some of the things that we've patented and we're working on right now to provide even more novelty into the ecosystem as well through point of sales. And again, we've got the team who's built these types of systems before, who's evolved traditional spaces forward through the e-com boom, and has got the right mentality and ability to get these things done.
Exciting.
And that guy's not a balloon. I know that I've had a bunch of FUD. Phil, wave your head a little bit so they know it's not a balloon. There he goes. All right. So he's not a balloon and he's not a balloon either. And then we typically have another guy here. Becky's not in the office right now, but yeah, we've had some people say, why is he putting a background? So I'm not putting the background up anymore because it's real people. We're in a real office.
Love it.
Not
it's
a
all
balloon.
about getting personal here. We're getting personal today,
Oh, thank you for this, because I think, we wanted to show that we are real people, and it's not just one man with a background. Yeah.
Love it. I have another question here from Helifox. Asked about native integration and importing of Hedera accounts within the BS app. Better yet, maybe even use Wallet Connect to just delegate BSL for staking, etc., and be able to claim the RUSD.
Yeah, exactly. So we're going to be the second. So we got involved with the community several months back. They were looking at building a Hedera only, an HTS only Connect feature, wallet Connect, like that would just be used by the community, the Hedera community. made the suggestion that no, we should integrate with Wallet Connect just because it's already widely used, and that would put us in every wallet, right? Automatically, we're in every wallet, HTS. And the community did a great job. They pivoted, they did that. So now we're going to be the second to launch Wallet Connect 3.0 with full HTS and Hedera support. And then that's also bringing on some other novel implementations that we're doing that I can't talk about. Certainly, though, the ability to in a feature we have releasing here, we're working on our staking right now. That's almost completed. That will all use Wallet Connect and the ability to stake just directly through the app. I do believe we just launched an upgrade a few weeks back that allowed for 24-word, 12-word EC and ED based wallets that were created with either one of those algorithms to be imported into the wallet. So yeah, we're moving at light speed and really starting to push forward beyond the capabilities just in general in the market as we continue to grow. And some of it is alignment with kind of credit union and the push on the credit union side. A lot of it is the alignment with the BSL DAO and what we're doing over there with the lending and the components that we're adding into the wallet for BSL token holders. And then, of course, the kind of third piece that we're focused on is how do we provide more value and collaboration to the HTS community, the Hedera community in general, just by providing novel ways for people to interact cross wallet, cross protocol, cross token within one app, or at a minimum, something that can be implemented in multiple apps, but that is utilizing the technologies that we're rolling out to enable that.
Great stuff. Great questions. Shout out to the Hedera community
for
submitting these. I've got another one here from Space Ape. Asks, will BSL be considering other chains in the future? If so, are there positives and or negatives to consider as a holder of the BSL token?
So we were already on Ethereum and BNB. Those tokens. So what we were looking to do was consolidate to a single chain so that all the tokens were minted and lived on a single chain. The ability, we had a community member a year and a half ago create a bridge to Polygon and spin up a liquidity pool on Polygon. That's the great part about DeFi is there's no centralized mechanism, at least in the way we've built it. I know that a lot of other tokens have taken a different approach, but the way we've built it, it's decentralized. Anybody can go out, anybody can bridge to another chain, anybody can create a liquidity pool on another chain. Anybody can technically write a staking contract for the tokens. It's so exciting because we can't even imagine what the community can think of. We're thinking of things too, but we see the opportunity to go back out to other chains. So we're in the process right now of consolidating the Ethereum side down into HTS, strengthening the liquidity pool on HTS on Saucer Swap by I think doubling it to a couple $1 million. It's already at close to $1 million. We'll double it to almost 2 million or a little bit more. And then that'll be one of the stronger liquidity pools on Saucer Swap, and I think even on Hedera DEX in general and DeFi general. Also, though, it doesn't rule out the ability to bridge to other chains. I think that there's still some. So one of the reasons we had a lot of questions early on about why we didn't bridge the token over, and because of the novelties within our token, we had to utilize all the features of HTS. And I think that some of the bridges just made that, it's not that they didn't build it or they didn't have the capacity to build it. They certainly could have built those features in. They actively decided that, and I think their reasons are valid. I don't think any of their reasons are not valid. That based on their model, implementing all the features of HTS, like the ability to wipe, the ability to freeze, some of the fee on transaction. They just didn't want to implement those features because of their business model. Again, I think that their reasons are valid when you consider their business model and the reason why they did that. But for us, that didn't work. And so because there was no major bridge, and because we really felt like the best place for the native economy to live was on Hedera, we are bridging all the tokens. I think the community agrees now that the BNB, we made it a push button it a push button migration in the wallet, so super easy. Nobody had to do anything. We migrated everybody with a single push button. Same thing for Ethereum. We'll do that. And then, yeah, absolutely, the ability to bridge back over to other chains and recreate liquidity pools. Something we could do, something the community can do, something that anybody out there can do. So we certainly haven't, nothing within the ecosystem or the code base would prevent anything like that from happening.
Gotcha. You mentioned earlier the DAO, but I have another question here from H Bar Quest. How does the BSL DAO tie into the new DeFi credit union?
So, one thing I want to say is that nothing that we're doing relies on this new credit union. So I've seen a lot of, misinformation out there. Nothing that we're doing already. So all the BSL DAOs already spun up. The token's already doing its thing. Loans are going out. They're being repaid. I mean, none of that requires this new credit union. Okay. The other thing to understand here is that we're already in several credit unions. So the Bank Social Exchange and our payments hub, our payments network with RUSD and the Rivia kind of payments hub model is already in several credit unions, right? So nothing that we're doing here. The reason why we spun up the DeFi, the proposed DeFi Federal Credit Union was we wanted to create a sandbox that could demonstrate how a more DAO type of automated type of low overhead type of non-interest income type of financial institution could be spun up. So it really parallel to, but not in any way required for anything that we're doing. So I've seen a lot of misunderstandings of what the credit union is. It has nothing to do with the success we've had and the continued success we're going to have with everything we've built already. It's really just something we wanted to explore with, and frankly, create a native credit union that was Web3 native, right? For Web3 natives. But again, it has nothing to do with our ability to scale everything we've talked about over here, to provide people with credit unions that will allow them to, be native crypto users, be native Web3 users, because we've already got credit unions that have enabled our Bank Social app, right? And that will allow you. So we've worked with them to, a lot of banks right now are keeping people from buying crypto. So when we go into these credit unions, we work with them in their credit card processor to unlock those features so that they're not getting blocked, because a lot of credit card processors have just across the board wiped clean, because when you register as a business, as an MSB or as an MTL, you get a transaction code type. So everything that comes through from your business comes through with a certain type of transaction code, and they've created transaction codes for those types of crypto businesses. And so we've gone, with our partner credit unions, whenever we launch into a credit union, we work with them so that you're not disabled from utilizing the exchange and from, getting into self-custody and doing a lot of things that we're talking about. So the DeFi Federal Credit Union, the proposed DeFi Federal Credit Union, is just a parallel component. Has nothing to do with our ability to continue to gain traction. It's really just we wanted to explore that with the NCUA, the regulatory body, to create a framework for new credit unions to spin up under the Web3 automated, low cost. It's kind of this new model for enabling a credit union.
All right, great question there. Glad we were able to clarify that if there was any misunderstanding around that. That was great. Let's look into the future for a second. Dream a little bit.
Oh,
Where do you see Bank Social in, let's say, 5 years?
So we see Bank Social as being the predominant open banking infrastructure play for community banks and credit unions across the majority of the globe. Certainly in places like South America, Australia, India, where they have growing economies, fragmented economies, way behind the curve of technology, have the ability to just let go of what they're out of contract. I mean, some of these financial institutions have been out of contract for years, paying month to month, waiting for something that can take them into the future. And so we've said, we intend to be that mechanism, and then of course growing the ability for the BSL token and the BSL DAO. We've even had some credit unions, frankly, we've even had some credit unions that have asked us if their members can utilize the bank social loans to get loans. And we've said, absolutely, absolutely they can. And so in the bank social wallet, if I'm not mistaken, there's a feature that is released or about to be released where you can apply for the loan now in the wallet. So this is absolutely something that we see over the next 5 years being the predominant open banking platform that not only connects members with other members, but that puts that future proofs financial inclusion, so that once these credit unions adopt these technologies, they're no longer bound by kind of these existing centralized, you know, gatekeepers that are sequestering access to these new technologies. We're already seeing it. We're already seeing the adoption curve ramp up, and we're starting to see it interest internationally as well.
And what about this year? What are you most excited about for 2024? Bank Social or Hedera or crypto in general?
Well, I think this is the year. So if we look at what happened, so I've been in the space since 2010, so I have a unique perspective. We were talking to a credit union CEO probably 2-3 weeks ago, and he, within the last couple of years, has just recently kind of what we see as our the biggest step is helping their team understand just blockchain and DLT in general. And most of the time, it starts with Bitcoin, frankly, right? Because it's kind of the most corpus of data is on Bitcoin. So, when these people understand that, it's much, much easier to get them to understand the rest. And so we were having a talk with a credit union CEO of quite a large credit union, and I was giving him my perspective on, if you look at the halving charts, the epoch charts, the logarithmic movement of the epoch charts that tends to, mimic itself every time. In 2021, we saw the whether you want to call it the tail end or the beginning ramp of the retail, the people starting to understand that this was a revolutionary technology that was really going to disrupt and change, just like the internet did. So same thing happened with the internet. You had people like me and my brother and Kevin and Phil over here who, as young kids, we saw this evolution, but the people coming after us and the people before us didn't really understand it until it became a button to push on a device, right? Whether that was a computer or something else. And that's where we were in 2020, 2021. So the initial wave of that started happening in 2018, 2019. We had the fall off of all the failed, kind of the next wave of failures happened in that point. But what we saw in 2021 was we saw retail, right? It was all over the news, but it was late in the game. It wasn't until the market had somewhat peaked or was nearing a peak. And so retail kind of heard about it and caught on to it at the very beginning of that. And I think in this wave, this coming wave, we're going to see the full adoption from a strategy perspective. I'm not saying that everybody's going to throw away all their technology and switch to Web3 in the next 6 months. We're going to see that become a cemented part of financial institutions and really businesses worldwide, their strategy. And I'm not just talking about the Michael Saylor approach. I love the Michael Saylor approach of buy, hold Bitcoin. Certainly, though, the adoption of these Web3 technologies that shift from read to write to own. That is what's going to be cemented in strategies in 2024. And we're seeing it already. We're seeing financial institutions, we're seeing businesses, we're seeing the likes of kind of, the retail person. I mean, look at what PayPal did, right? PayPal just jumped on board the whole stablecoin thing, launched its own stablecoin on Ethereum, not even thinking about why wouldn't we want to be on Ethereum. They just did it because they were like, hey, we need to make this part of our strategy to remain relevant in the space going forward. And I think that what happened in the kind of the 98 to 2003, we're kind of in the, if we had to pick a point in time, we're not in 98. 98 was kind of 2019, 2020. We're not at 2003, 2004. That's probably 25, 26. But we're at that first wave of adoption, like 2000, 2001, where you started to see the Amazons. So you saw the fall off of the pets.com and the ones that weren't going to make it. And you started to see the meteoric exponential rise of the Googles, right? Google's around since 94, 95, right? But didn't really start making a huge headway until Yahoo fell off and some of these other ones fell off. And then they started making their, and I think that's where we are right now. We're probably 18 to 30 months away from a full adoption where it's not just a part of a roadmap anymore, but it's a component within the ecosystem of a lot of businesses. And even if they don't know they're using it, just like businesses don't know or care if they're using ACH or know if they're using some other, rail. They just want to push the button or click the button and then it just works. And so that's what's going to happen here in the next 24 to 30 months. We see a lot of companies and a lot of businesses, again, a lot of financial institutions making it part of their strategy, cementing it in as part of their strategy this year. And I think this is the year of and that's why we love Hedera, because there's no better display of a network that you'd want to use for this future strategy than one run by 39 of the largest corporations around the world. So that's what we see, and that's what we're focused on, and that's what it looks like is going to happen in 2024.
I love the Web 1, Web 2, Web 3 evolution. It nearly feels like we're going full circle, right? Going back to the initial kind of vision of the open internet.
Exactly. And what's funny is, people say crypto, and I let them say it now because I just I've gone past the point. But crypto is an ancient Greek word, right? Crypto with a K is an ancient Greek word. And this cryptography that's powered this entire from Web 1 to Web 3 is the algorithms have changed. Certainly, they've gotten stronger, and they've changed. But the technology behind it is from the beginning of the internet. Like, the internet wouldn't work without the cryptography and the security that comes with cryptography. And so I think it's funny that we're back to crypto being the enabling factor, when really it's been the enabling factor all along. I think what more has become the enabling factor is the move to the nano compute, the edge compute, the device compute that we have here, and the ability for these devices to do these complex cryptographic computations in a safe, secure. I mean, the secure enclave on these devices with multi-factor has proven to be quite successful in thwarting attempts. I think what we're going to see is a move away from the centralization of data, because we know that those become honeypots. And you don't have to look any further than things like Experian and just the vast number of breaches they've had. And that all comes from, I like to say that Web 1, the scale limiter of Web 1 was access. So, you dialed into AOL and you really just got what they let you see. And then ISPs came on, and that kind of was the wave of Web 2. And now we're seeing the scale of Web 2 is limiting by the fraud, access to data and fraud that's associated with it. And that's why you see this move to the ownership model, where I already know all about myself. My phone probably has every piece of information and data, from my social security to everything else you could think about me. It's probably somewhere in my secure enclave. Okay. And that data shouldn't have to be like, I should be the one sending it to everybody. Credit Union A and Credit Union B, or Credit Union A and Lender A, they don't need to communicate, right? They could sign my payload, they could sign my credential, and I can pass that data along and everybody can feel secure. And then you reduce the attack vector from the centralized entity to the edge, right? To the individual, which is that's a much harder nut to crack as a hacker, right? And I'm sure eventually that'll reach some scale that we haven't seen yet, but nobody could have envisioned back in, the 98, 97, that our next scale problem was going to be APIs and fraud in 2024. And so I think we'll have a similar run with Web3, probably somewhere in the range of, but every cycle is faster. And so does this one last for 30 years? Maybe not. Maybe it only lasts for 15 or 12. But certainly we do see the move to the ownership model. We see the move to the reduction in the attack vector, that trustless environments. I mean, it's funny because networks have been doing trustless architecture for 15 years, 20 years maybe in some cases. But again, it took robust compute, robust infrastructure to enable that. That now, the robust compute that was in some rack, some 4U rack in '98 is now dwarfed by the compute power on this thing. So yeah, we're extremely, again, to quote a industry term, bullish on this future.
Yeah, it's crazy just to think of what you just said about the phone, right? And I just can't imagine where we're going to be in 10, 15. Like if we've come this far in the last 20 years, where are we going to be with AI in 10, 15 years, right? I don't think we
Yeah.
can even imagine it.
Yeah, one of the things that we told some credit unions the other day, and a company that was doing some mobile stuff, is I said, look, in '98, so a friend of mine named Jeff Pulver invented, he basically got something called the Pulver Order passed, and I just went down to DC a couple weeks ago to celebrate the 20th anniversary. But the Pulver Order was the FCC codifying that a 1 and a 0, just because it was used for voice data, a 1 or a 0 over an internet connection was not a phone call. And so MCI, AT&T, WorldCom, all those companies lost in that. And what happened was that opened up the world of business communication and the opportunity for businesses to live on the internet. So he left his chairman spot. He founded Vonage, early voice over IP company, left his chairman spot because he believed so much in what this future could do that he left the chairman spot and spent years getting the Pulver. So thank you, Jeff. If you see this, thank you, Jeff, for that. But what I wanted to say was that we see a similar transition now. If we just look at something like the Helium network, right? So Helium is democratizing connectivity, right? The phone service, the mobile phone service, I don't think is going to have the same thing. Our kids won't be paying for a mobile phone service. They might still be paying for internet connectivity, but I think it's going to be democratized internet connectivity. I should be able to monetize these new LoRaWAN devices that have long throw, mile throw,
Yeah.
2-mile throw. We're just getting to the beginnings of these technologies, right? Mesh networks, the idea of mesh networks, the idea of mesh communities. So that's the whole socializing capitalism. That's the idea that really can start to take off. Capitalism is great. We should incentivize each other with compensation, right? We should incentivize each other. But I would rather incentivize you, Jack, directly versus having to go through a series of centralized intermediaries only for the purpose of moving the value from me to you. What are we doing here? What is this? The Stone Ages? We still in the Stone Ages? What's going on here? So that's the interesting component that I think here in the next, that'll take a little longer, probably 3 to 5 years. Certainly though, we're on the verge of these types of socializing capitalism really starting to take off. And I mean, that's what we've built with the BSL DAO and Bank Social.
Yeah, we're getting real close. Real close. John, it's been an absolute pleasure. Is there anything we haven't touched on that you'd love to touch on before we wrap this up?
Oh, I'm sure there's 100 things, but the thing that I think we want to touch on is this is all about community. This new space, this new world is all about community, microeconomies. And so the last thing I'd like to do is just thank the entire Bank Social and HBAR, the Bank Socialites, the HBARbarians, because without the people, this new kind of democratized financial and really socialized capitalistic model, social capitalism, would not exist. And so above all, thank you to all of you out there who are part of these communities, who believe in this future, who champion this future, because without you, there's really no need for this future. And without you, the future would not happen as fast as it is happening. So all the love and power to everybody out there listening to this and part of this evolution.
Beautiful. Thank you, John. It's been a pleasure getting to know you a little bit more, getting personal with you, and I'm sure the community will really enjoy this interview. So thank you for taking the time today.
Thank you so much, Jack. It was a pleasure.